everyone, Jonathan here, SlingshotFutures.com. Welcome to the Daily Futures Market Outlook for tomorrow's trading. Tomorrow being the 30th of the month, January 30. Well, right around the corner, almost done with January already. One thing to keep in mind before we jump on in, we do have likely the gold futures market rollover going on tomorrow. Today the volume was really close. Tomorrow might finalize it, it might not. So keep an eye on that volume going into tomorrow for the gold futures. Now, before we jump on in as well, as always, make sure to swing on over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter, where you can sign up for our email newsletter list so you'll never miss one of these ever again. Now, of course, this video is in there, but it also covers a lot of things that we don't have time to talk about in the video, so make sure to sign up for that so that you don't miss any of those potential opportunities ever again. And then, of course, make sure to click on the Live Trade Room subscription and trial info, where you can sign up for a free 3-day trial of the Live Trade Room so you can get your feet wet and kind of see what we're all about for a couple days. And yeah, go from there. So let's jump on in here. Of course, right off the bat, the S&P, the euro is pulling off of the highs. Now, a couple things that stand out here for the euro. First of all, drawing up a channel from the low to low, transposing it onto the high gives us a test of the top that looks pretty good. We also have a 1, 2, 3 wedge top forming as well, and that gives us a little bit of a clue in terms of what to expect. Now, we could also take this same level and copy paste it down here for a potential kind of bottom of a channel, and that is where we are finding a little bit of support right now. One of the big things that I'm looking at here is if we zoom in a little bit closer, we can see that previous swing high, and we have missed that swing high test. A physical test of that level has not occurred. And if we do start seeing a lot of bullish sentiment coming into play, very frequently when you get that kind of formation where they come down and almost test that previous swing but miss it by just a little bit, you usually end up getting a subsequent lower high, but it is still a decent bounce. So I'm looking for a decent bounce on the euro all the way up to around about 24,730 or so before we start finding some more resistance to push the market back down. Usually means that the market isn't done attempting those lows, but a lot of times it does mean that over the next several bars, we're going to have some upward momentum. So that's what I'm looking for. And given the fact that it has a very nice looking bull bar and we have the channel lows coming into play, it's close to that previous swing high support. Everything looks good for a potential bounce up again to around 24,700s or so. That whole area looks pretty good as just sort of a price objective, if you will. Aside from that, nothing else has really changed that much. We're still in pullback mode as anticipated over the past couple days. We're looking for the buyers to step in for that lower high, and then from there we can look for a longer move to the downside, cycling off of the wider channel to the bottom of the wider channel, but still looking for that bull move first. Over on gold, we are testing the lows of the larger channel, but one thing that really stands out here is the very obvious strength to the downside. This is something that you would anticipate seeing more continuation on. We had that big initial drop lower, buyers tried fading against it and have failed, and we now are pushing back down again. So now, it really just looks like the sellers are looking for a larger objective. Looking backward a little bit here, we can see a swing high, swing low, multiple swing lows, another swing low, all stacking up in the same place, giving us support at 27.5. And that's going to be the objective. We have the sellers pile driving in. We might see a short-term, a push through and a short-term correction back up, but likely sellers are looking for a price objective. And when that is the case, we are looking for a deeper move down, and likely all of this is just one big leg down. So we can continue in A to B equals C to D correction lower into major support. Now, 1327.5 is the big area of interest, and we're probably going to find a lot of bouncing off of that and maybe even a little bit of chop. If the sellers do end up breaking through that, though, we have one more major objective, which is the base that they set up before the rocket ship to the upside, really kind of the beginning of January. So that is something that we do want to keep an eye on, but for right now, I'm looking for the bearishness to continue down to get a test of 27.5 next up. Over on crude oil, we are still kind of stuck inside this wedge, not really much going on, and this is a good example of what we were just talking about over on gold, is simply the fact that we come down, we almost hit that area of interest, right? They come down, they almost hit it, they bounce off of it, and they start turning back higher again for a lower top. That is definitely something that is sort of the anticipation that we were talking about on gold. We saw that happen on crude into the lower high, and now we're dealing with a little bit of a wedge. So with the wedge formation, it's not the best looking wedge in the world. I guess I would draw it something like this, and the lows arguably haven't really even been completed yet. If anything, a flat bottom wedge. But we're still seeing a complete lack of conviction to the upside from the buyers. And that gives us a clue that, hey, you know, maybe we're looking for a wider channel. We have the channel highs from previous. You could also draw it from here, one way or the other. Let's mark this up, widen this out a little bit so you can see the difference between the two. This is the first option. We do also have the secondary option. It all depends on how aggressively steep you want this channel. If we take this level, though, we can transpose that down to the bottom and give us a channel bottom. Either way, we're looking for a cycle back down to retest, potentially trap below 64.91 and get a test of some of these rising levels of support. I think a lot of traders are waiting for better prices, and that is especially true given the fact that we have absolutely no follow-through through the highs. They tried to get it. Right, if we zoom in a little bit here, we can see that the buyers caught that pullback. They bought into the moving average. They got the dip back, and they bought into it, rallied back up, started hitting towards those highs, and, well, as you normally expect to see on this kind of dip, they started having a lot of trouble, and they're finally able to make a move right here. It completely fell apart and fell in on itself. So, I mean, just a gorgeous bear bar signaling in another 4 to 8 hours of downward momentum. I have a hard time believing that this isn't going to be followed up with a secondary leg. So I'm looking for another push below the lows currently at around 65. I would love to see a trap below 64.91. And if we can get this to stall out for a little while, we might have something like this where we can get a kill zone on horizontal support and rising support all coming into the same place. Either way, though, I am looking for a little more bearish continuation on crude oil for some better prices on the buyers jumping in down there. And then over on the S&P, we are also seeing some profit taking off of the highs. Pretty bearish day overall on the index markets. This is going into a 3-push wedge top. We have 1, 2, and 3. You could arguably say 1, 2, 3, and this would be a 4th. But the way that these kind of peaks look, the fact that we had such a strong move down here, this looks more likely to be 1, 2, and 3. Either way, though, we are forming somewhat of a topping pattern up here on the indexes, and again, we are pulling back. One big thing that I love looking for is a correction to buy in at some slightly better prices. The last several times we've had any type of correction down, the buyers have been very aggressive off of these lows of the channel, and I'm looking for, at least initially, likely the same response. So the initial response probably of a few points, maybe 5 points or so on the bounce off of the lows of the channel. But this does have a decent amount of bear strength to it. It would not be a surprise if they can maintain some of this bearish movement to find a secondary leg. And we might be able to go back to that earlier base point that they put in at around 28.35. That would be the really good scenario if we can get down. If we can dip back down to 28.35, it would be a phenomenal area of interest for buyers to start stepping back in and looking to hang on for potentially a couple weeks back up towards those highs. But right now, we look like we're a little bit overdone on the S&P to the upside. It's time to take a little bit of a break. So sellers are coming in. We are still obviously bullish, but in the short term, it does look like things are pointing down. So over the next couple candles, anticipating that bearishness to try to continue to get down to test that rising channel support low. Either way you slice it, we're red across the board. The S&P, the Euro, crude, gold, we're red all the way across. Not by much, but it is definitely a pullback day. And, well, we're looking for a little bit more of that pullback continuation into the overnight session. And then from there, if we can start hitting some of those bigger areas of support, the buyers might have a chance to swoop back in and push the market back up. That's going to do it for the market outlook for tomorrow's trading. Of course, as always, if you have any questions, you can send me an email, jbrink@slingshotfutures.com. And like we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.